Welcome to the Quant Room, the stories behind the data.
I'll let you do the intro.
Y'all know what it is. Quant Room, the stories behind the data, powered by Spikeet. I'm your host, Marcus. And today we have our very next guest in our third episode. His name is Max, and his Twitter handle is Schecter6. I think I said that right. I just learned it's like a guitar brand. So he's a very, I would say from my research, a lot of psychology, a lot of human analysis behavior, a lot of talk about AI, a lot of just modern stuff. Seems very smart. And today we'll get into some of his stories behind, how he started his trading journey and the data that he uses to beat the market. So my first question to you, Max, is how's your day going, man?
Not too bad, man. Listen, I'll take the compliment off the gate, but as a trader, you never have the opportunity to feel too smart either, though. You throw it out there, you try something, but it's I'm wrong more than anybody else that I know.
No,
How about you, man? How's your day?
Well, I ate Wendy's today and had a stomach ache. I don't know why, but that's kind of how my day went for some reason.
Listen, that's there's no stop loss with that sort of strategy,
No, yeah, definitely not. I definitely hit a maxi on that one today. So I was KO'd a little bit before the interview actually got started. So that's kind of, the general midst of my day. I also haven't, I told Max before this, I haven't been trading, and my trading itch is, I don't know how it is right now. We'll see in like a week, but I've been telling everyone like I'm going to have to quit my job soon. I just can't do this.
All right. So can I don't know the general style of the interview that we're going for here, but can I ask some questions about your trading before we eventually circle it back onto what I'm up to? All right. So you're fairly new, first year, second year into the game?
No, I'm 5 years in. No.
Okay. Wasn't sure.
2020.
Okay. 5 years into the game. What sector? Are we trading crypto? Are we trading equities? Are we trading long side, short side? Give me just a quick rundown.
So I have a trading, we can just call it a systematic group where we research and try to beat the market through data, obviously. Okay. We have a crypto trading, like a trend trading strategy for crypto. We have a short that hasn't been implemented, which I'm going to try a short strategy on small cap universe, of course, that hasn't been implemented. And then I have my own personal long small cap strategy. Okay. That's kind of pretty much aiming to take the opposite end of those trades based on kind of like news and stuff. I shouldn't give out too much information, but just based on hype and news and stuff like that, news that's actually going to sustain, that people will get stuck in like a short squeeze, and you can kind of see the short squeeze and happening in the middle of the day. So those are like my three main strategies that I have data about. The last strategy that I trade is themes. I believe heavily in themes, introduction to themes, stuff like AI, stuff like quantum, stuff like I guess aerospace and defense, things like these themes emerge in the market, and when they're relatively new and haven't been developed yet, or maybe they've been faded a lot, and now they're something in the real micro world is giving them some type of push, and you can see the volume coming in huge to the numbers. I try to diversify and pick like some of the best stocks in those and try to ride out the theme based on some type of correlation to, real life events. Another thing that you could have seen happen in real time this year was the stuff with Trump, with the tariffs, right?
Yep.
When he released the tariffs or he said, I'm going to hold off, the market would jump, and then you would see certain stocks like Nvidia and other things like that. They would ride the wave. A lot of these things that were faded once they got the push. So this was kind of like it's not exactly like a easy theme, I guess, to present, but this is like something that I also traded. So I look for themes, something that has correlations that you can easily predict what the market's going to do. At least if you have enough experience, you paid attention, it gets easier as you go each year. And then I tried to trade that as it rides out. So
right.
That's kind of like my style of trading. So that's like the discretionary part that I do. And the other stuff is more of the systematic. I have the data to prove that this should work. Sometimes I'm wrong because sometimes me and my group, we overfit, or we've ran through our issues of backtesting and things and making things too complex like every other person in the space.
Well, overfitting can work for periods of time also, right? It's there's two sides to every coin. It's like, from a discretion standpoint, I traded a lot of like themes and sector hype like that. It's across small cap sector hype used to be constant. There was basically money would always rotate from one thing to the next thing, and whether it was whether it was a logical reason to be there or not, there was amazing opportunities. It allowed you to kind of get a pulse on relative strength in real time and get an idea of basically where you could sit against the laggards. I mean, I was generally short side in those sort of things. I'm somewhat optimistic, but I'm much more of a pessimist, or I'm better at anticipating which antelope is the weakest and going after that generally.
Yeah. Okay. That makes sense from like my research. That's kind of seemed like a lot of the takes was definitely, as you were saying, like as you grown older and you like matured, you I guess see negligence in more people and more things, and you think the world is kind of in a way, yet the utopia is not there for you. You don't see the world in that manner anymore.
I mean, I have to like lay a caveat, right? It's like I am human, so I have to bet on the home team. You know, you can't just like get too bared up on humanity and be like, oh yeah, we're all going to hell in a handbasket, right? But I mean, so like I kind of look at the AI landscape right now currently. I say like, okay, human behavior is just on like a plateau, right? Like we're exactly the same as we were thousands of years ago, right? So you have like this weird situation where like humans are the same, but AI is going to compound and continually get better and better, right? So it's like, isn't the best arb trade you can put on right now betting on tech to get better and humans to stay exactly the same? So a lot of the things that I'm working on or looking at currently is kind of through that lens.
That makes sense. I mean, to me, that makes perfect sense. I guess the ideal for me would to counter that, not to counter it, but just to go off that would be to say, I don't see a world where humans magically just all of us just get smarter enough to keep up with AI.
Correct.
But I do see a world where we get better at using tools. I think that's what humans are good at. We find ways to make things easier for us to use tools. And I think we'll get gradually better and better and better. And it'll be like exponential how good we are at using tools. Like everyone, in 20 years, there'll be an 8-year-old who knows how to use whatever Chat GPT new thing. And they'll be able to do coding or make apps or whatever they want with it. Like that's kind of how I see it, you know?
Yeah. I mean, listen, the future is murky, right? It gets harder and harder to forecast, right? But it's like in the short term, I'll be the first to say like, I'm an okay programmer, but yeah, no ego. I'm a shitty programmer, big picture actually, right? And it's like, so now augmented, it's like, I can literally just basically route via API to like, okay, I'm just going to have, Claude talk to fucking 5.1, right? Talk to 5.1 or GPT, right? Talk to that, and then we'll mix Grok in there, and on the Gemini model, and you can basically put everything in a whole stack. And we're like, okay, I'm gonna have all these models basically work together on a singular output now, right? Yeah. And it's like, okay, wait, I can basically build anything I want very, very, very quickly. It's
exactly.
Like, is it perfect? No. Is it security grade worthy? No, absolutely not. But can I proof an idea in a day that would have taken me a month before? Without question, right? So it's this weird time where, to your point, I mean, tools are basically as much as you can physically leverage your own curiosity and burn the midnight candle, as you can build things and get answers to almost all your questions.
Yeah, I would agree with that. I think technology is leaning that way for the people who are trying to get an early grasp on it and be motivated about using it and just trying to learn. I think the ideal of like I have a brother, right? And my brother's he's not good at using computers. He's always been that way. Right. He's very hands-on. He like builds houses and stuff like that. He's he's an electrician, right? Okay. So, and I always tell him, I'm like, he'll ask me to do something for him because he doesn't really use Word, and like I had to make him a resume. I'm like, you should, really use Chat GPT to kind of help you out a little bit. And he's like, no, I hate AI. I'm like, okay, bro. You gotta drop the ego, bro. Like, it's gonna beat you out at some point, anyways. If it's not now, which it probably is now. Like,
inevitability is coming.
Yeah, like. Learn how to use the tools. That's like, if you're a caveman, you're like, oh, I don't want to use the oven. I'll start the fire by like
fire. Why? Are you kidding me? I don't want to ruin my microbiome for all these years I've been developing with this raw meat. Yeah,
like I don't know. So I don't know. Yeah, but that's kind of how it's going. So to speak on this a little bit more, tell me about how you got into like all the tech and trading. Like, how's that mix for you?
So so I wasn't in trading originally when I was young, like 14, 15. I taught myself how to program and build video games. It's back in the early 2000s. I was just always a curious kid, always working on a million different things. It was like, well, okay, I played a couple of games, like, okay, how do they work, right? It's like I grew up on a farm fixing tractors and all sorts of things. Then eventually playing around with the computer, I was like, okay, I know how everything else works, but how about this? So kind of like cut my teeth there, worked in that industry for a while. And then basically just bounced around, did a whole bunch of different things, worked in marketing and a couple other things. And then eventually I got to a point, I always had this idea of like, oh yeah, you know what? I'm going to build a business, sell it. I'll let somebody else manage my money. Heard a couple horror stories of, money managers losing everything for people or more than half. And I was like, wait a second, I don't want my contingency, I don't want to, if I'm going to lose half potentially, or I'd be open to some sort of outsized risk
to be your fault.
Yeah, exactly. I'd rather assume the risk. I don't want to have to beat somebody else up. I'd rather beat myself up.
Right.
And so at that point, I went down the rabbit hole. I decided to take like a short side mission at the time and say, okay, yeah, let me just learn how to trade, and I managed that. And yeah, it was not a short.
No, it was not short.
It was like a Hansel and Gretel sort of situation. Instantly, the breadcrumbs were gone. I was like, all right, I have to figure this out.
Oh man, that is hilarious.
Yeah,
a lot of people's stories is like they start trading, and it's not even like, I'm just gonna start, try to figure out where to put my money, invest it. I'm just gonna do it on my own. I'm just learning a little something about it, and they just get drawn in. I don't know what it is about trading. I think it literally grabs certain people. Like go ahead.
I think it's an infinite game. I think if you're a curious person that basically a curious person that has drive, I think it's the infinite game. And I think it's one of those things. It's like it's a zero sum game. So and the liquidity is infinite, right? So if you're able to find an edge, you have basic mathematical skills, it's pretty easy to realize, oh wait, I can pretty much take this wherever I have to go. Right. It's not the Tim Sykes laptop on the beach. Oh, I get freedom, because this is the least free job in the entire world. Like you're competing against animals, right? It's like you're competing against people and institutional grade sociopaths practically that will do anything to take your lunch. It's like, this is not a game where you find an edge and you get to go, oh, you know what? I'm good. I figured it out. I get to retire now. It's anybody who's had a systematic edge for a period of time has probably hit that point where that edge stops working or it breaks, and realizes that like this isn't a one-time thing where you find a business plan and it works forever. It's basically an arms race. So I think it's an arms race for curious people.
Yes, I think so. I think that's what draw me in. But just to go back here, how long have you been trading exactly?
Coming up on 9 years now.
Okay. And what was it like when you got started? Like, what were you looking into? You kind of talked about you was just doing it to kind of manage your own money. What was like the first kind of strategies you were looking into?
So, I mean, strategies, it was pure discretion originally. It's I'll sum it up quickly. I threw like 10, I don't know, 6 to 10 grand. I forget the exact figure in an account. It was just swinging it around. Basically, it's like, oh, yeah, I feel like this company is going to do well, or I did some research on this buyout, or basically just pure outright discretion and short-term swings. And then I basically had a decent amount of luck, I'll say. It's like I traded through like the dry ships and the original like dry shippers, pump and dumps and things like that, which was insanity at the time. Scams as usual. And
don't knock the scams. They get a lot of people rich.
I trade a lot of volume in scams. I can't talk.
Yeah, exactly. Don't knock the scams. I can't
talk. I'm thankful for my counterparty, so I traded through that. I took that tiny account from somewhere around 10 G's up to like 60, mid 60s in, I don't know, 4 or 5, 6 months, somewhere in there. And then promptly took it all the way back down to like 5-6 grand. Yeah, just pure, like straight up, straight down. And it was like, so it was like one of those, oh yeah, I can imagine. It's like, oh yeah, I figured this out. I'm smart. I got a little bit of an ego, and then just bam, blew it all out. Yeah. Which was brutal, but I'm quite happy that I'm happy that I didn't rack it up to a couple $100 grand and then blow it out, Yeah. So I basically realized very quickly, I was like, okay, I saw the potential. At the same time, I realized like, okay, this is a little bit more complicated than I thought it was. And then continued down the path of discretion for a bit, but then quickly realized like, wait, I'm just being a human scanner. Like I'm sitting down every day. I'm like reading the news. I'm going through my tickers. Like I have a process, like I think people call it like a pre-flight checklist, right? And basically going through doing my pre-flight checklist, and I was like, okay, wait, I just gave myself a job. Like this is, I don't want this. I didn't get into this to give myself a job. So then I kind of went back to the, went back to the old programming routes. Was like, okay, how do I automate? And how do I make this simple? Like, how do I automate my scans? How do I basically how do I do all the scanning for myself? And I think that was the initial push into like systematization.
Okay, good. Because I was going to ask you that as the next question, but you answered it. So let's see here. You were talking about you pretty much like 600% your account, right? So you took it. You said you had like 10, and you took it to like 60, right?
So,
and then you took it back down to 5. Yep. Walk me through that process and why it happened. Like we all go through it. I never like did that much and took it down, but we all go through that kind of like that big blow up. And you know, like I made a ton of money and I'm super excited. I love trading now. Like, you know, I'm hooked. I really see the possibility. I can't believe it. As sometimes you think it's like easy when you're going through it, and then you just it just destroys you. And you're like, oh man. A lot of people quit at that point, you know?
Yeah.
That's what pushed you to keep going, and just walk me through the psychology of that process and how you were feeling through those months or moments. Like how long did it take you even grow that money?
I mean, no, this whole thing happened within 4 or 5 months, right? So it was very quick. There and gone. I mean, it was I think it was just a matter of just being on the right side of the trend initially, right? Especially I had some ideas that lined up into a like insane sector hype. And then ultimately, I think it's part of the give back was getting caught in an offering. If I remember correctly, didn't understand that part of it nearly at all at the time, or just the standard dilution of it, right? And basically, you get trained very quick. The behavior that you get trained on that works out for you, just because it works out in that situation doesn't mean that it doesn't have negative skew over time, right?
Yeah.
So it's like so it was like, it was a very quick, basically a rip up of elation. And then, wait, this isn't working. Oh, wait, I'm doing the same thing that I did before, but why isn't it working? Oh, wait. And then like 3 oh shit situations in a row. And it's like, okay, we're right back to where we started.
Yeah.
I mean, so not emotionally good for you. I don't recommend it, but, the one thing that I learned, it's very quickly was, and just always kind of like defaulting to forced optimism when it comes to situations where I'm learning something. I was like, okay, if I can make money that quickly, I can do it again. And more importantly, if I can lose money that quickly, that could have been an opportunity to make money. So I don't generally look at things and go, oh, why me? Why did this happen? Oh, this sucks. It's like, okay, how could I have done better? What do I have to do next time? It's like, so often people basically just talk about the markets like indexing, right? They go, okay, yeah, it makes on average you can make 10% a year. And I was like, okay, if I can trade both sides of a product that has volatility, then there's no way I'm going to get stuck at 10% a year. I was like, I'm happy to lose money, but I want the skew on that opportunity, you know?
No, okay. Yeah, I've never really looked at it that way. I guess when I lost my account, I really didn't look at it as actually, that was a big opportunity to make money. I kind of looked at it as, oh, I should have stopped. That's a very interesting. That's the first time I actually heard that. So you looked at the opportunity of you losing all that money, and you immediately thought, well, damn, if I would have shorted that, or if I would have took the opposite end of that trade, or however you lost the money, I don't know. But if you're like, if I took the opposite end of that trade, I could have made a ton of money.
That was generally my thought at the time. I was like,
wow,
because very quickly I looked at it and I was like, I knew this was a scam. I knew all these things I was trading were a scam. I stuck around for the momentum. I got out and then tried to buy dips. And but I was like, why was I trying to buy dips? I was like, oh, because I was just trained from the positive outcome of the last trades. I knew farewell rationally. I knew back then, talking to myself last week, a month ago, I was like, I knew that everything I was trading was scams, but for some reason, because I had trained myself on the outcome being a positive function of that behavior, I was like, if past me should have written me a sticky note or wrote on the calendar, hey, it's a scam. Eventually this is going to go back to where it started. Maybe don't try to buy a dip on that. So it's like, I pretty much just highlighted that. I was like, oh, wait, my current behavior is a function of how I got trained on my path, how I got trained in a positive outcome that I should be playing like an inversion narrative on.
That makes sense. And that makes perfect sense, right? I think that happens to all of us. I think I'm still probably in that mentality today.
I mean, Yeah, well, so one thing I'll say is like tons of traders are like, if you look at day one gappers and do some like just gap stats, it's like day one gappers and even day two gappers, depending on floats and things like that. It's like those stats have changed a lot over the past 5 years. I mean, a lot over the
Mm-hmm.
past 2 years,
Mm-hmm.
and tons of people are still trained on the easy years, right? It's like there was a long period where you could make a lot of money basically just shorting anything that was up over 100% with a reasonable stop, right? And there's a ton of people that are still blowing themselves out every single day on these things that don't really have edge anymore, right? And which is kind of crazy, right? So there's tons of people that have been trained for 20, 30 years or even 5, 10 years doing something. It's not so easy for people to untrain themselves.
Yeah. Yeah. I mean, that's exactly it right there.
And there's an edge in that. You were about to say?
I was going to say, and you talked about, the negatives, the positive, like something can train you positively, but it can have a negative skew over time.
Yeah.
Do you like believe in, I guess, cycles? You talked about themes too. So I'm assuming you kind of believe in like cycles of the market, which is not something I have found a lot of systematic people kind of really reference or even focus on, like cycles of the market,
So this is why I'm always talking about the human factor. So it's like I trade a lot of different things, right? But one thing that I've found is that it's like everybody will basically say, okay, like the stats guys quite often will be like, okay, these are the stats. That's it. Nothing more.
That's it.
Right. That's the stats. It's like I get into arguments quite often about this. So, oh, never turn your system off. Your system has to be out of bounds for you to basically turn it off. Just follow the system. And I've always, I don't know. I push back against that pretty often. On like using small caps as a base example. It's like I don't trade most of my volume there anymore. But using small caps as an example, it's like there's always slow periods, right? And we touched on this for a second. It's like you can use Twitter as sentiment. It's not hard to scrape Twitter and find all the short side traders that are basically just like, where's my paycheck? I haven't gotten paid. I haven't gotten paid. I haven't gotten paid. And there's always an outlier that basically relights some sort of small sector of just garbage companies. And it always comes after these basically slow periods. So if you find a slow period and you say, okay, here's like a day two gapper. That's with the right the right float stats, the right dilution stats. It's gapping at least 40% above its prior close. You say, okay, there's N percentage that it's going to at least touch yesterday's high, and you're getting halfway through the day, and everybody on Twitter for the past 2 or 3 weeks has been like, "Where's my paycheck?" Right, and then all of a sudden this stock is going sideways, and it's not fulfilling the stats, and the day is going on. It's like, okay, this is an outlier situation. Right. It's like a lot of people would say, hey, listen, I have to stay in the trade because the stats say it. From my perspective, I look at that and go, you know what? The skew is actually potentially to the long side at this point, just due to the fact that we know it's crowded, right? Because everybody wants it.
So that's like a very, well, I don't know. Actually, I guess, do you use data to prove that? Or like, that's just something like you're using your analysis of the market. I have traded so long, like, because I agree with you right there, right? That's kind of like the situation that I was talking about, the other side of the trade where it's crowded. It's the shorts are getting stuck and now they got to get out. And that's when I'm looking to get in. The stock obviously skyrockets from that point, right? So that's like one of the setups I look at. But how have you went about, I guess, measuring that or trying to figure out, is there just all knowledge in the head from just observing the market?
So you can't just keep it all in the head. Like it's very tempted, but it's like we all have recency bias. I don't care if you have a perfect database brain and can remember everything. It's like you're gonna overweight the present, which sucks. I wish it wasn't the case, but it's like that is also our edge, right? The fact that people have short memories and make mistakes is like those are the people we're playing against. So you kind of have to prey on that, right? Personally, I try to keep databases as best as I can of these things, and find scenarios that are like this. I mean, one of the things that I find interesting is that edges go way faster than ever, right?
Really?
These days, I mean, things that have worked for a long time. It's like I've found, especially with futures. I mean, stats that have worked for a long time have been breaking down over the past 2 years, which has led me to try to find all sorts of alternative data and, find things that other people just don't have access to. Right. It's like as we're in this giant compute war with AI, and it's like one of the best ways for people to, convert LLMs and convert AI compute into actual money is basically by trading in these sort of situations. So it's like it makes the market exponentially more complicated.
Yes.
Exponentially more complicated and exponentially more competitive at the same time. So when it comes to these sort of one-off situations where you have to basically say like, oh, hey, how is this edge working out? I basically at this point look at things and go, hey, what's been working really well recently? And is there probability of mean reversion on that? Because nothing continues at this point.
Oh, that's actually a lot of information you just gave out there. I'm definitely gonna take that and try to look at what's working. And yeah, you're pretty much saying like this strategy could have been working for like 4 or 5 months, 6 months, and now for the next 2 or 3 months, if you figure out what that strategy is and how to play it down to the opposite, because things are not working as people figure out, like, if we all can recognize X strategy has been working for the last 6 months, then we're all going to get into it. Now it's contested. Correct. Now, as a trader, if you can reverse engineer what they were doing and how to flip that, you now can make money for the next 2, 3, 4, 5, 6 months of people continually to do that. So I'm assuming that's what you meant by you copy people's like watch lists, or you see what they're doing and you're like kind of taking the opposite end and fading what they're doing.
Oh yeah, no, I always want to know what the crowd's doing. It's like, but it's for the listeners, before we hopped on, it's you mentioned that you don't use Twitter, that's your thing, and I was like, use Twitter, and you were like, well, I have no aspirations of being famous. I was like, no, don't tweet, don't tweet. Literally, just scrape Twitter, or basically like make stacks of people that you're like, okay, these are people that I generally don't want to bet against, and these are people I generally would want to bet against. It's like human behavior is like the best. If you can make 2 separate indexes of people that I want to bet on and people I want to bet against, that you can find confluence between those quite often.
Oh wow! Okay.
And then mix that with stats, and you can find some interesting situations.
Yeah. So you're doing some very advanced kind of, I guess, data collection here. You're doing data collection on people. You're scraping Twitter for like what stocks people are using, for like kind of like hype trains almost, to figure out what you should short. And you're actually collecting data on people's call outs, like their stats on this person's right. Is it like this person's right 50% of the time? This person's almost never right. Like, how's that going?
It's just because I'm lazy. Like, I'll be the first to say it. It's like, I'm just lazy. Like, I don't like some people, well, like there's brilliant people around the entire world, and there's even more idiots than that. Right. So it's like, some people will make amazing write-ups and basically like, okay, I broke down these SEC filings and all these little nuances about this company, and I know about what the CEO was doing in the past 8 companies that he worked in. They'll do all this write-up, and I'm like, I'm too lazy. I'm not doing that. There's no way. Yeah. But I have access to that guy, right? Like, there's, I don't know, 20,000 guys like that I have access to, right? And I don't have to read it all anymore. I can use an LLM to read all that instantly now, right? Right. So it's like, it's this amazing time. So it's like, if I have the ability to basically stack all these people together to generate ideas from, and I can build a stack and find like where these smart people's ideas overlap, or where all the dumb people are collectively clustering, then that's a good situation for me. Right.
That's a beautiful situation.
It's like, I don't want to spend any. It's like, why should I spend time researching individual companies, right? Especially if I hate doing it, right? I'd rather curate people and then basically find overlap of where smart people agree, and where inversely dumb people are really against it.
This is, I mean, that's the first time I heard of this in, like, I guess the systematic world, but this is actually a common thing in other industries. Like, I mean, they do it all the time. So it's not like a foreign concept of data collection. I just haven't heard this. As I guess system traders, we always just, let me go grab the data from Spikeet, or grab the data from here, put it all together and let me run my analysis. And you're like, no, I'm grabbing, you're doing something completely different. But do you use data and stuff like, I mean, I assume you.
Hell yeah. No. I open, high, low, close. It's like, I've spent my fair share of time with it, but I just like to blend it, right? Is the way that I look at it. It's like my general fear, like as I alluded to before, it's like, this is an arms race, right? So if everybody is making weapons with the exact same metal, then you're gonna run into some problems. You're always going to lose out to the person with more spend, effectively. I'm still retail, right? I'm a small guy over here trading small capital compared to the absolute animals that are on the other side of the bid, right?
Yeah.
So I look at it and just say like, okay, we all have OHLC data, right? Like, I don't want to compete against people that are able to basically just rip through that data with better clusters, right? I want to find some sort of secondary data point, data 2, data 3 that I can layer on there and find something a little bit that isn't going to erode as quickly. I look back to like after that initial basically like run up in my equity and then blow out and then having to learn again. It's like I played around a lot in the OTC markets. I found some great edges there, made a chunk of money, and then those edges broke. And I gave 20% of the money, 30% of the money that I had made on those edges back. And I was like, okay, maybe if I had more strategies, I only would have given 10% back of that, and then continue it forward from there.
Very interesting. I've never actually looked into OTC.
It's dead these days. It's been a long time.
Hmm.
Occasionally they pop up, but it's not like it once was.
Yeah, I feel like everyone was talking about OTCs when I first started trading. I first started trading a little bit before COVID. So like right before COVID hit. And I know like OTCs had this moment. But things would skyrocket in one day and the next day everyone would lose their money on it. So that's that kind of kept me away. But now I love stuff like that.
Oh, that's half the fun.
Yeah, that's all the fun.
Yeah, I mean so that's one of the things that I always recommend that to new traders is like don't come in here and be like, okay, yeah, I want to trade Google, I want to trade Microsoft, like I want to trade against the big boys. That's no, find the dumbest market with the dumbest money and play against those people. Like start there to at least establish all the concepts.
That's a great quote. Find the dumbest market with the dumbest money. That is a great quote.
It's I'm probably I'm hoping that other traders have said it before me. But it's like it's no different than poker, right? It's like you don't want to play against the sharks.
But
right?
Yeah, but even when you're talking about like poker, like if you can play at the table that has a lot of money with the worst players,
yeah,
that's an extreme edge.
Yeah, exactly.
If you know what you're doing, like
exactly,
that is free money, right? So, oh my God, that's such a okay. Yeah, I'm learning a lot here. Okay,
I mean, the trouble with so many traders is that it's pursuit of ego, right? Every time you close a trade, you feel smart, right? Yeah. And it's like anything that you can do to override. It's like, how can you just maintain like consistent, okay, I'm not that smart. It's like, how do you keep yourself there? Right. And because it's like, and then look through that lens and say, okay, it's like, I want to play against people that are, constantly thinking they're smart now.
Very interesting. So, let's take a step back here from the trading stuff. Let's just talk about you as a person. Like, what is your characteristics? What like makes you go? Like, how would you describe yourself to someone like on a characteristic level? Like, who makes Max exactly? Like, what makes Max?
Relentless curious, like curious to like no ends. It doesn't matter what the topic is. Like I'm a firm believer you can learn anything. Like that, it's talking about dumb people as an example here. It's like you can learn something from every single person you meet. It's like talk to everybody. You don't like you have no idea, right? It's like you will always extract a little bit of value from everything. It's like nobody's above anything. It's just generally a hard worker, like to have fun and try to figure things out that nobody else has.
That sounds very optimistic. I don't think like that, but I definitely I have an ego. I had more of an ego coming into trading, but my ego has been not deleted, but it's definitely been subdued a lot because of trading. Because you have to live in results, and it's just you behind the screen.
Yep,
you making the decisions, and it's a very humbling experience. It's definitely made me mature as a person in general.
Without question.
Coming into this, I almost succeeded at everything I did in life. Like there wasn't really much I didn't succeed in. I went to Junior Olympics. I was D1 in track. Thank you. So I was very good at a lot of stuff, and I worked hard, but I wasn't really working hard. I was kind of talented, but I got like injured playing football, and it taught me about hard work. So when I knew I had the talent and the hard work, I immediately excelled even further, like through college and everything. Like I graduated as a mechanical engineer. I didn't go to like a good school or anything like that. I don't think that's like, I don't think I'm super smart, but I can learn really fast. But just in general, that was kind of like me. And I kind of brought that ego into trading. And I kind of feel like you need that ego in trading, but you have this different perspective where it's like, how do you feel about ego in trading? Obviously I can tell like you need to drop it at some point, but do you feel like you need it? Like, is that a characteristic?
You need enough to get back up. Like you're gonna get punched in the face. Like
Right.
you're gonna lose 18 trades in a row. Like you got to get back up. You're gonna feel like an idiot. It's like nothing in the world will teach you about yourself more faster, right?
Agreed.
But you can I think one of the benefits of this is maybe an odd parallel, but one of the benefits of backtesting is the fact that you see like the bigger picture time series, right? It's like you always exist in the moment, not to get too philosophical, right? But you exist in the moment, which means that you exist with the loss that you just had, right? Or if you're trading discretionarily, you might have had like, 5, 6, 7, 8, 9 losses in a single day, maybe even more. And you're like, okay, well, I'm just an idiot. I can't get anything right. But I think one of the nice things about having a back test is that you're like, okay, here's a time series of like 600 trades, right? Mm-hmm. And you look at it and you're like, oh yeah, I can see in this time series that like there was a period of 18 losses in a row, but after you flip the coin enough times, it does have positive expectancy and it works out, right? So it's like, I think you need the ego to come back to the screens or keep showing up. But I think you also don't want to have so much of an ego that you anticipate that only good things are going to happen, because you don't know where you are in the time series, right? You don't know. It's like the perfect equity curve can be standing at the next trade can be the top for that strategy. You just don't know, right?
Yeah. Yeah, exactly. You never know. And that's also why I feel like you have to have some type of ego. Like you said, you get punched in the face. You need to be strong enough. You need to have the confidence enough and the belief enough that I can make this money again. I've seen traders just drop out because they'll lose 10% of their account and they're like, oh my gosh, I lost 5 trades in a row or whatever. My strategy doesn't work. They're doubting and questioning everything. I don't think that's a great mentality. I don't even think that's a great mentality in life in general, but I just I can't really relate to that. I always feel like sometimes I'll just do trades that I know I'm not supposed to because I feel like I can just make the money back. I was like, whatever. Like I'm going to take a gamble here because if I don't, like I have proof that what I do works and I can make the money back. So just speaking on, I want to talk about more about your systems, and then we can get a little bit more to about back testing here relatively shortly. But you said you trade a lot of things. Yeah. Can you just give you don't have to go over like the name of the strategy or anything. Like, is it like mean reversion? Is it shorts? Is it, what are we talking? Is it trend trading? And how many strategies do you have?
Oh God, I don't know, 40, 50, 60 plus. It's a lot, right? I mean, I have a team also. Like I have guys that guys that work on strategies also. Like
I have a team too.
Oh yeah. Delegate a lot of things to this point. It's like I try to be mostly on the idea side and then basically like roughing out the ideas and then pushing them downstream at this point.
I love that. I love that.
But I mean, we've tried. I mean, over the past year, everything from market making on like on not Polygon. Yeah, on yeah, no. It's I'm blanking on it for a second. On Polymarket. Yeah, like market making on Polymarket and prediction markets. To I mean, obviously just a lot of just human psychology, outright based like data strategies across that, deployed across like the indexes and things like that. Just outright rule based futures strategies. It used to be a lot of short side, basically small caps. Now I think 70-80% of my volume on small caps is long side, just because it's the edges are evolving. I think personally, I think markets are getting more efficient, and as a function of that, I think the people that existed there are trying to basically haven't gotten enough pain yet. So I'm trying to basically extract money from that pain trade. Yeah, a lot of different types of strategies.
Okay. So yeah. And then so 40, 50, 60. Tell me more about this team, right? How is it structured? So you have, you yourself at the top. Is that how, I mean, you talked about you told me about your partner that you run the business with.
Yeah.
But so just give me the breakdown of how it's structured.
I mean, it's everything is just like a data pipeline. So basically everything we do is trying to pull in alternative data, and then that data is then basically passed down to the team to transform, try to pull out as many stats as we can from there, and then push that through, at this point, like, basically just LLM workflows to, have the robots test as many ideas as possible, spit those out, push them through validation engines, and then we at the end are the humans that have to pick through the validated strategies and say, okay, is this worth deploying, or should we keep it on the side? Which I don't love, because it's the hardest part of any stack, saying like, okay, it's like I'm still the one deciding this strategy, right? It's not that when running fully systemized stacks, especially where you're basically just I mean you can push everything through the validator, right? And say, okay, yeah, no, it passed the noise test, it passed the variance test, it passed this Monte Carlo. It's like it's within bounds. It's basically picking up enough points. It's all right after slippage. But then at the end of the day, you're the human saying like, okay, this one as opposed to this one. That's the tough part, right? And that's the kind of that's the bottleneck still. That's the part that comes on back onto my desk, and I do my best to say, hey, this strategy is most likely going to align with the current times and the current markets and where I think things are headed. But I don't think I'm that smart. I don't think I should be the person making that decision. I think that should be the part that's also systematized somehow.
Really?
That's kind of why I'm like so far down the AI rabbit hole and saying, hey, how do I at what point does AI intelligence become emergent enough that I can put that on its desk and not take out the human element?
I feel like I don't know, because obviously I'm not that far into the in the fields as you are in this, but I feel like that's almost never. Right. I kind of feel like that I feel like you make all it does all the data, it does all the research, right? It can tell you all the information. It can even give you a suggestion, right? But I feel like it would never be like, this is the better one, I feel like that will always have to be you at the other end saying, this is what you should be running. This is what you should be putting on. This is what strategy I'm going to put live into the market. I feel like that should always be you.
I mean, listen, I'm happy to be the one. It doesn't. I have no problem having it be me because I could very well. I can very well pick the worst strategy out of the stack and of that week, right? That being said, I don't have my pull. I can't possibly take as much inputs as a machine can at this point, right? It's like a machine knows the world far better than I can. A machine can write a report that's 500 pages long and remember every single one of those pages. I might remember the last page really well, you know? So at a certain point, it's what is going to have a better pulse on the market. And the question is like, does that send strategy that is maybe going to perform a little bit better in a lower vol environment? Am I better to forecast that I don't know, the next quarter is going to be lower vol, or is the machine that is able to really keep its pulse on the world going to forecast it better, right?
Yeah, I mean, fair enough. I mean, the machines are, at least they're smarter than me. I mean,
Listen, it's the scariest answer I could possibly get. Like I'm over here. It's like as a trader, it's my job to anticipate risk. Really,
that's what I'm saying.
Else,
exactly.
Right?
That
right.
I feel like that's the part right there. Is as a trader, it is your job to set that for yourself. Right. And I feel like the machine doing that kind of removes it. But in a way, you did talk about, trading is not free. It's not a free job. So
no. Not at all. Well, it's like, so I think part of the reason that so many people move
that's my ego. That's my ego at the same time. That's my ego, right? So like I said, exactly. I have an ego. So,
know thyself, right? It's well, so think about it like this. So many traders go to systems because they just can't stop themselves out of a trade, right?
Me.
Yeah, listen, hey, been there. I told you my starting story, right?
Yeah.
And inversely, so many traders will basically just not let the trade play out. They'll micromanage it. They'll do a million things. It's like, listen, I'm guilty sometimes. I'm still human, And but I mean, so many people move to systems because of that, right? So logically, it's like if a system is better at doing that, then could the system be better at also saying, hey, this environment is better for this system? Because the system might not necessarily be pre-trained in the same way that we are. We're pre-trained by how we slept last night, right? Are the relationships in our lives and or a P&L from last week or the week before or the month before, or are we in a drawdown, right?
Yeah.
Machine, it doesn't necessarily obviously depends on how you weight those factors if it's even that kind of model, but I don't know. It's basically I'm looking at it from the sense of like the risk at a certain point there's going to be a lot of opportunity out there when a large percentage of humans can no longer admit that humans can't keep up with machines anymore in the markets, and machines will obviously start to excel at that point and they'll never look back. So that's it's a certain opportunity and a certain risk. So I'm just trying to keep my pulse on it,
Yeah, and you seem to be very early on it from a I guess commercial, right? Like a commercial.
Maybe, I don't know. It's maybe this might be a situation where the winner eats all, right? So it's I could be a small fish and just and I'm definitely a small fish, but yeah, do all small fish get eaten at the same time is the question, right?
I don't think so.
I
But
don't think
that's just my personal belief. I hope not, at least.
I hope I didn't put all this work into this.
We have to be optimistic about so I hope not.
Hey,
Okay,
listen, I'm not bored. That's all I care about, you know?
Yeah. So to forward this conversation, backtesting. What does a backtest even mean to you? You're doing um some vastly different concepts from a lot of people. Like, for example, how would you even backtest, you know, uh I guess the success of someone else calling out a trade, or what they're putting on, or that long report summary that they did on the stock? How are you even backtesting? Like, how is that process going?
So I forward test all those ideas. Like it's
Okay.
it's easier for me at that point. It's once I have an idea, it's like my goal is to always put a million things into incubation, right? It's like I'm sure I could find a way to backtest it, but for me it's easier to say, okay, this seems interesting. Is this happening? Let me put the rails on to basically forward track it and then let it run from there. So it's if I can build a system to forward track it, it's much easier. Sometimes data scraping is a pain in the ass, and it's like you get a lot of variance in it. So I try to do it that way as best as I can. It's even when I was just building like outright OHLC systems, I would always have like a validation period. Say, okay, the system has to take at least 5, 10 trades on its own. X percentage of those has to at least be wins and losses to make sure the code is working correctly, as basically data's rolling in. And I would basically just create silos of like, oh, here's 20, 30 strategies, and I'll look back on them in, I don't know, 4 or 5 months to see how they did. And then some of those would get basically moved forward, moved live. 99% of them always end up getting thrown away, if not more than that. So I try to just basically put everything in that sort of siloing sort of situation.
That makes a lot of sense. The successful traders I have talked to, most of them have opted out of doing these extravagant long back testing and just relying on the forward test to see if the strategy actually works. And I'm starting to lean towards that's probably the best method. And just for the people listening, some people might not know actually what a forward test is. Can you just explain what that is to them?
So, I mean, every strategy starts with a data point of 1, right? So it's like, okay, I'm going to use it as like a human basic example. It's like, oh, hey, this person who's, scraping it, reading all these SEC filings. Let's every single time he tweets about something, let's see if, let's basically just drop that tweet into a time series and see if that individual equity closes positive on that day. Okay, basically let's just write that to columns. And okay, and now it's say we started it on the beginning of the year. Now 2 months into the year, he's tweeted, I don't know, 25 times. So we've got 25 data points. And so that would just be a very basic forward test.
Yeah, that sums it up right there. So then for the actual rule driven strategies, what does the back test mean to you in that?
I mean, so obviously a lot of different validation metrics that need to go into it, but I mean, it's 100 trades minimum generally. It's like, if I'm back testing on historical data that everybody has, I need at least 100 data points. So it's like, you can go less than that, but it's like, you want to, and unless it's a situation that has a very, very high RR skew and is going to be worth, I mean, yeah, I generally stay away from it, but you want something where you can flip the coin quite a bit. So absolute minimum 100 trades, especially if it's like futures data and things like that. You want the data to going back over a decent period of time. I mean, a couple of years at least at this standpoint. I mean, some people believe that you can backtest and come up with an idea in 3 months. I'm generally against that.
No, that sounds insane a little bit.
I mean, you can, don't get me wrong. I mean, there's periods of time where certain things will work, right? It's like you can use like the first hour of the day, right? As an example, it's like, okay, what's the thrust on the first hour of the day? And okay, it's like you can find periods of time where those sort of trends continue, and there is alpha there. But I'm a big believer in split testing, right? It's basically take the data, cut it down the middle. Does it perform on the second half in line with the first half?
Make sure, right.
And make sure that the what's falling into those two splits isn't just aligned with the bias of the strategy. So often people will basically will model on like '08 as an example, and they'll say, okay, yeah, it's like basically if a strategy can survive '08, then okay, then logically on another large sell-off it'll be perfectly fine. It's like, okay, everybody's been training all their strategies on '08, which means that the next sell-off doesn't happen like that, right? It's like data the forward outcomes of situations is going to prey on the tails that everybody else modeled against, right?
Yeah.
In the sense of like the COVID sell-off, of course, it was super violent due to just, the world being shut down. But at the same time, it's like a lot of strategies that would have modeled correctly and trained on '08 data that would have been fine there got absolutely smoked through that period. The moves were out of bounds.
Yeah. Yeah. The market's living. You can't just, I guess, you can't just say, well, it worked here, so it should work here. Like things change in the market. Which I have from my data and my testing, I have a very, I don't talk about it as much, but I have a hot take. My hot take is pretty much the market has drastically changed since 2020, and pretty much the data before 2020, like your strategies, like that previous data, it's great if it works, but like it's really not as prevalent as the data after 2020 because the volume, just different strategies, a lot of stuff has died before 2020, and some of it has been revived in 2020. Something like, let's say, a mean reversion strategy might have been dead, previous to 2020, and they could very much been alive after 2020. But this is a different volume profile. There's different technology. There's different algos. There's a lot more people trading. There's a lot of smarter ways to go about attacking the market now that I think if you say, hey, well, this worked before 2020, so I'm just going to take it into 2020, you might be shocked. For example, the opening and the open close short on gappers, like this is something that worked historically that has, right now probably not performing that well. And that's mainly because social media, different conversations like this, edge erosion, I guess, in general, right? So just different things. The market has changed drastically. And that's just like my hot take. How do you feel about that statement?
No, without question. I mean, it's to the original point that I was making. It's like I prey on a lot of those situations. Like I want to find situations where people are all trained for one outcome. It's like one of my favorite sort of situations. Like whenever an edge starts to erode and it becomes really evident in the data, it's like, okay, I want to be on the opposite side of that very quickly because I know it's going to take at least 2-3 months, if not more, for people to catch up.
You're an evil.
Yeah, no. I'm not kind. It's like, listen, I've been smoking on enough trades to know that if like there's blood in the water, I have to go after it immediately at this point. So I want to find those situations that people are off sides and hoping for things to go back to what they were.
I would say when I first started trading, it probably, I don't know. I would say it probably took me like 2-3 months, exactly as you said, before the pain to really start hitting me. Like, this is not working anymore. You need to do something else. Yeah. And I feel sorry for the traders that it takes longer. Now it takes like a month. Like now after like a month of getting my ass kicked, I'm like, all right, you got to stop, man. Like, give it up. Like,
I mean, from my perspective, it's like those cycles will get smaller and smaller, right? It's like it's human. It's like you could draw a parallel to human attention, right? What's the average amount of time that people watch a TikTok reel or an Instagram reel? It's like 1.72 seconds or something like that, right? Like could go. Yeah, listen, brutal, right? But it's like if human attention can go that low, then it's like attention bleeds over to everything, right? So it's like people's look back window on their, on their memory or their memory window or look back window, or their memory of edges is going to get smaller and smaller, right? So what they think is working, it's like, so I guess you could say like people's training window might go all the way down to 2 weeks, right? Where everybody's like, oh, I have to do this week. This is what's working this week. So yeah, I have to do that tomorrow. And then that continues before bam, their attention's gone. It's, oh, this new thing is working, right? So it's like, I'm of the mind that cycles get shorter and shorter and more often because of that.
Yeah, that's also part of like my theme trading strategies. Like I pretty much base my time and effort into figuring out what's been working on a short cycle and then repeating that until that cycle dies and then doing it again and again. It's like a high effort strategy. I'm always doing research on the market to see what's working and trying to reverse engineer it. And then after that, I obviously take it live like immediately. And then when it stops working, it's been pretty profitable. I think it's actually a really good approach to the market in general right now. Because you said, like you said, like a lot of people jump into things as early. Well, they jump into things at the top side when they see it's working and it's evident to everyone. If you can figure it out before then, well, you're kind of good to go, right?
Well, I mean, that's the goal. Easier said than done, of course.
Yeah,
right? And you have to,
like I said, it's very high effort.
Yeah. I mean, it's like, and you have to keep tabs on all these strategies, right? They will come back around in some capacity. They're not always exactly the same. They do rhyme though.
Yeah. Okay. So we talked about the back testing. We talked about the systems. I got an interesting question here.
Yeah, shoot.
So you noted that you are kind of not you're obviously doing a lot of data driven stuff. It's different in multiple ways from, I guess, what more people like me and I guess systematic traders and how their approach is to the market. You have found something very unique. So I'm glad we had to have this conversation. Talk to me about your discretionary approach in general. You mentioned that you will often interfere in your systems. What's the reason and how do you go about it? And what experience, I guess, what belief gave you, or what a belief or experience gave you the confidence to do such a thing when you have the data and you know the skews and you know like your win rate and stuff like that?
I think it came originally just from building a shitload of systems and finding overlap. One of the things that I found, like, so I mean, like, yeah, you alluded to it early. It's like overfitting and curve fitting, right? That's so one of the things that there's like an early thing of developing mean reversion strategies on the S&P. The logic was very stupid at the time in hindsight, but it's made perfect sense at the time. Was like, okay, if I've got 20 S&P strategies that are long strategies, it's like when 2 or 3 of those strategies agree, logically that should lead to a higher probability outcome, right? It's like logically this should mean to a better outsized return, right? And also as a basic human, it's like, oh, look, 3 of my strategies are going long tomorrow. It's like, listen, we're 5% down. It's like we had a red day yesterday. It's, we sold off a little bit more overnight. And it's like 3 of my strategies want to buy the open. Logically, 3 strategies, or even sometimes even like if 10 out of the 20 strategies want to go long, then that's a great entry, right? It's like, this must be good. It's like all these strategies with great equity curves, they all agree. And what I found was that that's just not true at all. Right. Basically, it was kind of like saying, okay, wait, if 10 strategies with 4 rules all agree on the same thing, then that's kind of like a strategy that's so overfit. It's would you trade a 40 rule strategy? It's like, no, you wouldn't. That'd be insanely overfit. So I basically stacked all my strategies together and just looked. Basically, I was like, okay, what are the returns when the strategies agree versus when the strategies don't agree? And it turned out that the individual strategies, basically only taking the trades when the strategies didn't agree, was actually more profitable than any of the times that all the strategies agreed.
Wow.
Which was a funny outcome. Yeah, it was a complete inversion narrative. I thought
you are doing some high level testing, some very smart stuff.
Well, it's not, I wouldn't call it that smart. It was just, these are all situations where I thought I was super smart and then realized I was being an absolute idiot.
But that's why it's so smart. That's exactly why it's so smart. Because you have all these strategies and you're using them in a way that I think is very unique in a way. Like you're using your strategies to test if they overfit each other, right? Like I don't think a lot of people are doing that. I was going to ask about diversification in like a universe. Like let's say you're trading a small cap, and when you just talked about like you're trading S&P 500 or whatever, the S&P, right? And you're like, okay, I have 10 strategies in the S&P. And you have 10 long strategies. How do you feel about that in general? It's a good thing, bad thing. How do you feel about that?
I mean, at this point, I don't want to factor stack too much. It's like I don't want to. Yeah, I don't want to pile in on any one trade. I'd rather. I mean, granted, it's like vol picks up and everything becomes more correlated, right? It's like we've all experienced that. It's if you've been trading long enough. I want to trade different assets at this point. It's like I want a couple different small cap or mid cap strategies, basically trading at the same time as S&P strategies, same time as like obscure crypto strategies, and like the ultimate diversification. If I can go into prediction markets and if I can spread myself out as much as possible to make as many uncorrelated bets that are not vol, that will not become correlated under vol, like that's all I care about at this point. I mean, of course, at a certain point you will cap out and at a certain point, you'll cap out and say, like, okay, listen, I can't get any more liquidity on here, but I'm not, I don't have to worry about that anytime soon, I don't think, right?
Yeah. Yeah. Well, yeah, I don't know. I guess what is like, give me a general ballpark. Are we talking 6, 7 figures, 8? Like what are, because you said you started off and you took that 10K to 60 to 5. What do we look like when we're trading now? Obviously, you have a lot of people behind you. You mentioned you have 40 to 60 strategies running. Is that running at a time? too, or is that just you have 40, 60 strategies?
They're sitting. No, they're generally not running at a time. It's like I'll always take some off. We're always incubating a shitload of things.
Right.
It's we have a massive amount of strategies sitting on the sideline. I mean, I hope by the end of next year we'll be running 50 minimum at any one time. Hopefully, let's see, right? It's but I mean, it's like all different time frames also, right? It's like these aren't all swing, you know, they're not all basically sitting there for an entire day. Some of them will only have like a 3-minute exposure, right?
Yeah.
Let me restart my camera. The yeah, seven in the 7-figure ballpark.
Okay, gotcha. And what was, I guess, the starting bankroll?
25.
Nice.
Because
So
after that 10, I
PBT.
had to re-rack it. I was like, you know what? I'm not sitting around to grind myself fully over PDT. I did grind myself over PDT, but I was like, after basically going above PDT, then below, above below, I was like, you know what?
I'm not doing it again. I think everyone had that similar experience. I started off with like 2,000. I made some money, lost it, and I was like, I learned enough.
Yeah.
Just threw the money in over PBT. It was like, let's get it, you know?
Yeah, the one thing on PDT, I think PDT is actually cruel because PDT basically says, oh yeah, you've got enough cash so you can now lose it really stupidly. It's like, let them do it with $1,000, you know?
That would make sense. Have they ever explained the logic behind that?
That nobody's explained the logic. They did mention that they were potentially going to remove it. But let's see.
Yeah, because it doesn't make sense. It's like, okay, you put all this extra money in here. Now you can lose your money as fast as you want. But when it's a small amount of money, it's like, whoa, let's be safe. Yeah, that doesn't make sense. That doesn't make sense at all.
It's also funny because it goes again. I mean, you could say that we're actually looking out for the public and we have the public in our best interest, but it's like, come on, SEC. It's like I see pump and dumps every single week that are like GTZ, like, you know, caveat emptor. It's like that are just absolute trash, and it's like they let those on time and time again. So do they really care about the people?
No, but let's be optimistic. They're trying to do something.
Generally, you know,
I have good faith, but I don't know what that something is. It doesn't make sense to me. Okay, so 50, 60 strategies, start off with the 25K, relatively successful, have a group now. How has the group gone? And like, what did you do before you had the group? Like on a single trader perspective, have you always worked with people? You said you could do programming, but you really didn't like it. How did the group get started? And like, when in your trading journey did the group get started?
Group is over the past 2 years, I want to say. Basically just as like, I'm like full forward, like military deployment at this point, saying like, how can we gather alternative data and be ready to, like, you know, build our own, build more of us technically, right? It's like for a long time, it was just me in a silo. Didn't really like working with other traders, occasionally worked with other people, but it just wasn't, I got into this because I wanted to, you know, do it by myself and not really depend on other people. Would occasionally have trading partners here and there, but, a lot of people just would come in, work really hard or not work so hard, lean too much on discretion, or you eventually butt heads or something like that. And it's like, you know what? It's like, is what it is. Or just get interested in different things. Other people can, you know, a lot of people in this industry will, you know, make money or finally hit their stride. And then all of a sudden, you know, elevate their lifestyle to that and then blow out as a function of that. Right. It's like the first year you make a couple hundred G's if you upgrade your house, your car, and your girlfriend at the exact same time. Then how much of a pullback can you really sustain? And but before all of a sudden you have to get a job, and then you start self-cannibalizing all your other relationships, right?
That's funny. In a group, in a Discord I was in, we always used to talk about when you start bragging and celebrating and want to improve your life. That's right when the market humbles you.
Oh, guaranteed. Yeah, guaranteed. But so basically part of the basically bringing people in and starting to build a group was it was just at that point where I was like, you know what, I think there's a lot of underlying dynamics changing about the market right now, and I want to leverage the knowledge that I have and what I've built out to basically get as much leverage as possible. And especially it's I mean, with AI sitting where it is right now, I'm like, listen, it might be a small window before this industry changes absolutely forever. So I was like, I could do it all on my own, but I don't have the ego to do that. So I was like, listen, how much ground can I physically cover in a short period of time?
That's a smart thing. I did the exact same thing for the exact same reason.
It makes sense.
Nowhere near as successful as yours, but we got like 4 or 5 strategies. but we're working on it. We're still getting the implementation of everything. I got some programmers. I got some people that do research. It's only 4 of us, so but
steal my concept. Scrape Twitter. Borrow everybody else's brains.
Yeah, I have to run that by the group. I don't know if they're gonna be so sold on it, but I very much like the idea because I've been in Discourse before. I know for a fact that there's some people you can trust in there and you can learn great ideas, and great ideas from great traders do overlap. Yeah. And you can probably pick up something and actually do a data-driven approach on that, like you said. So that makes sense to me. But how long does it take for you, like before you got with the group, right? Or, you got your researchers, you had to, I guess, you can use the AI, but like, how long did it take you to develop a strategy or back test it and get everything done before you really got going with the group, like, 2 years ago?
Well, 2 years, I could bang out multiple strategies in a day. But like going back when I first started building strategies, I was relying on TradeStation primarily. So it's after kind of like getting the basically learning how to program on there via their native language. It doesn't take long. You can start building strategies in a week or 2, right? But getting good practices around those strategies and building an actual workflow where the odds of what you're putting in the incubator is going to have edge is it takes a year or 2 to, I think, really distill all the principles and the concepts into your mind, because I think it's very hard. It's very easy to just curve fit your way to a million pretty equity curves that have some seeming logic behind them that are just not going to hold up.
Yeah, when you got like 10 different signals and things are matching up perfectly every single time.
Going back to my multiple strategies agreeing is a logical thing.
Yeah.
6 some years ago. It's like, okay, yeah, there's a lot of bumps in the road. Granted, there's way more interviews, way more people talking about it now, that helps, but it's like, as fast as you can learn, the landscape is changing also.
Yep. And that's exactly why I said I think, post 2020 is just a different market in general. So now, so before you could just do it kind of relatively fast too, and now you can do it, I assume, damn near instantly.
Yeah.
What are we talking, like, got this idea, we can have information on it by the end of the day?
Yep.
Oh, wow. Very nice. Very, 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 very nice.
It's like build the, that's a nice thing. I'll say to anybody, it's like, whether if you're weak in programming experience, it's like, listen, sit down, pick your model and, build a very basic backtesting engine, right? That's like, load in some OHLC data and like learn how to ask questions from it. It's like, okay, what happens after, 1% up, 1% down day? Okay, normalize the data. Okay, it's like, let's what's the probability of mean reversion at 1, 2, 3, 4, 5 standard deviations? It's like, once you build that, every single data set you have now can be run through that. Now add a layer 2, add a layer 3, add a layer 4. It's like, once you build out a big stack like that, it's really not hard to test ideas in the next data you have.
Okay, so where do you feel we're at with AI? Because obviously you're putting a lot of money behind pretty much data coming back from AI. So where do you feel we're at in AI with AI right now? I guess the preface that, like, what I'm asking is, what is the trust level, like the confidence interval that you believe we're at with you can trust AI? Is it 90% of the data AI gives, you're like, that's good to go? Is it 50? Like, what confidence interval are we talking about?
So, well, there's different ways you can slice that, right? It's like, so it's, if you just basically prompt GPT and say like, hey, give me dilution stats on this specific situation. It's like, hey, what's the probability that it's equity from today, like, what's the probability that SMX is going to basically hit some sort of pipe or some sort of intraday dilution with over the next 72 hours? Give me confidence band probabilities on an individual day. How many times have they raised in the past? How many times in the past that they've raised have been pre-market,
right,
intraday, after hours? Okay, give me all the stats on this. Who are the underwriters in their past filings? Break all that down. It's not bad at it, right? But it's not perfect, right? So that's one way you could say, like, okay, how much do you trust that output? Now, then there's the second one where it's like, okay, I pre-curate the data, right? It's like, okay, I've already basically pulled all those filings. Basically, I have all the filings, I have all the data, I feed that into the model, and then I have the model basically break down the data that I've already provided to it and put an output. I have a much higher confidence bounds on the latter there, right? Versus letting it go out and gather the data on its own via some sort of super prompt, versus me gathering the data or basically having all the data feeds into some sort of tabular data and then having it make a decision on that. So I'm basically entirely focused on the second, on the secondary concept there. It's like, so I'm of the mind that it's our job as humans to create good infrastructure or good data workflow. And then at that point, then you can basically parse it to AI and say, okay, break this down. You don't want to have just one model, right? It's like you have have a single model that puts an output, and then a second validator model that checks it, and a third one that that basically cross references the work between the two, and then you have a fourth model that is an entirely different model. It's not of the not from the same company, and say, oh hey, you know what, we just did this work. It's cross validate this. And at a certain point, if you architect that correctly, it's the work's just as good as a person. Right. The difference is that you can get the answer back in 5 minutes.
So essentially what I just heard is you are hiring different AI models to run against and check each other.
Yeah.
Like you would in a human company.
Yep.
Okay. Do you care to give us more information about what AI models you're using?
I mean, you can get API access to all. You should be testing all of them. Is the general answer. I mean, don't give.
Okay. That makes sense. That makes sense.
Like
right.
don't give DeepSeek your email password. You know, I don't recommend that. You know, but yeah, I mean, you can get API access. Test all of them. Is the simple answer. Like give them all the same benchmark. My business partner forever was I think his litmus test that he would use all the new models is like build me a basic poker game. Right. And it's like, and it sucked. He's like, okay, yeah, this new model. It's like, we've been fucking around with them for a while now. And it's like, I was like, okay, what's the poker output? He's like, you know, it kind of sucks. So I didn't do it. And then at a certain point, like we crossed over that line where I'm like, he's like, oh, you won't believe it. The new, I forget which model it was at the time, but he's like, it one-shotted it, like perfect poker game. And I was like, oh shit. It's like for the past year or year and a half, it's been like, oh yeah, kind of sucked. And now it just one-shotted your test. And then the next model after that one-shotted, and then all the other models one-shotted. It's like, okay, now we need a new benchmark. What do we ask them to do now? Right. So it's like, that's emergent learning in some regard, right? So it's like, okay, if all of a sudden the test that you were using to validate how good something is has to get better, then you're headed in the right direction, right? At a certain point. So it's like, from my perspective, it's like, how do you keep your finger on the pulse of when it's good enough to trade on its own? It's like, you're not going to know unless you continually ask it, hey, build this poker game.
Yeah, that's a great way of putting it. I use AI a lot for a lot of different things to help me figure out different themes. Well, I use it in trading a lot. I even use it to help me sort like my backwatch list of different stocks to look at and draw correlations. And I have been rather impressed with the new model of ChatGPT personally. I mean, that's the one I'm using. But I've been rather impressed with what it can do and the things that it can pick up. Granted, it makes errors, of course, but I feel like it has taken my workload from an hour that I would do myself with just making like maybe some type of sector theme to watch and getting information about it and figuring out the news and fundamentals around it. It used to be an hour when I used to do it by myself. It's like 5 minutes.
Yeah.
But you do have to have that initial list, like you said, the data.
Yeah.
You just kind of tell it to go do its thing after that, right?
Exactly.
So where do you think this leads us as, I guess, retail traders in this systematic data world? How do you think we're going to be looked at in like 5 years? Are we going to be in good hands, or is AI going to kill us like it's killing everyone else? Like, is it going to take our jobs too? Like, where do you think it's going to lead us to?
So I'll start optimistic and I'll get more scary, right? It's
Okay.
or I can do the inversion, but it's like the one benefit that we have as retail traders is that we're small, right? It's like we're not like the big guys in the sense that we don't have to get into a position over 3 days, over a week, right? It's like in most of the more current markets that we're trading right now, unless you're trading obscure OTC things with a a 7-figure account or even like a super liquid crypto pumps or something like that. It's you hit the bid and what are you gonna you're not clearing the bid more than a quarter of a percent, right?
Right.
Which is good. right? I mean, so the edge of
That's
being able,
great.
yeah, it's amazing, right? The edge of being able, and that will, I mean, until I mean, you'll still be able to live a very, very, very privileged life with that sort of basically not destroying your own liquidity in that regard. They're basically like you're sucking your entire edge out, right? So it's like, I think that's the main benefit retail traders have, regardless of how complicated the markets get. Which is, I think, the benefit, right? That's my optimistic take. The non-optimistic take is that things will change faster and faster and faster. The ability to say, the ability to look at data and go, oh yeah, no, things are exactly as it's always been, or like, oh, we have a historical backtest, and that's just going to continue to exist. If you can find a way to historically backtest something that's only going to work for low liquidity, you might be able to have an edge there. But saying like, just using S&P data to try to find a backtest as a retail trader is going to get harder and harder and harder, as I see it.
Yeah, for sure.
So
I think,
yeah, go on.
I was going to say, I think that's going to be dead in like, I don't know, man, maybe because a backtest for like the S&P could be relatively easy. You have to find something real unique. I think that's going to be dead in like 3 or 4 years. I think that's like the first model that when they create the AI backtester that can do everything by itself, by you just say, hey, test the S&P every single time it closes red. I want to see if the next day goes green. That's going to be the first thing it's going to be done. And that's going to be what all the models are going to run against. That's going to be like the initial litmus test for it, right? So I think in 5 years, because I think in the next year or so, we're going to get an AI backtester in our market that can just do it itself. It's going to be one program. And I think your model's still better having like the AI agents kind of check everything step by step. But I think in the next year, we're going to get that. And those kind of open to close on the SPY type things, I think they're out of here, man.
I mean, I'm of the mind that it's already dead, right? It's like, I think it's
there you go.
Yeah, I think it's already cooked. I mean, I've seen it over the past 2 years in a lot of my systems that were based on historical data that just started going sideways or just breaking down. I was like, okay, well, and a lot of edges that were really good for a long time completely inversed, which means that some bigger fish found it and said, you know what, this is my exit now, right? Or somebody's alpha is now my edge, right? Because I'm bigger than them and I'm going to use them as a beneficial counterparty for a better fill, right? Yeah. So I think it's already dead. And what I'm doing isn't maybe there's nuances of it that are interesting or different. I mean, definitely different to retail, but there's people out there doing it. A lot of these big funds are doing things that you and I can't even dream of right now.
Right. I was gonna say, I think a good edge that we do have is that I feel is almost not beneficial for, I guess, the big guys to really focus on some of the small liquidity stuff or things that's not so liquid. So I feel I personally think that that's where our edge could be. Like if you have the 100K account and you can run some AI algos, you're gonna be playing in a space that most people are not. You could play in a space that's smaller that can offer some really good edge that people are just not going to care about because it's just not going to gain them any type of. I mean, they can have edge in it, right? But it's not going to move their account. Like it doesn't matter to them. Like
correct,
they're not going to play for pennies.
Exactly.
It's like the example with the poker table, right? Like the big guy that has the $1 million or I guess $10 million poker and he's playing for 50K, on the flop or whatever. He's not going to go to your 100K table. That just doesn't make sense to him.
Correct.
So I think that's kind of where, people like me, that's kind of what I look for. And then I worry about the upper level when I get there, It's like,
listen, that's a good problem to have. I mean, I always joke to my team. It's like, the exact line I always use is like, it's a moral obligation for us to take every bit of liquidity. It's like, if we are not working to break our edges, then what are we even doing here? Like, it's our job to smash it and then just stay right under that and keep it going while we find new things until it gets inversed on us too,
Yeah, that's a great point. Okay, nice. So, I want to talk about some metrics here. You mentioned RR so far. Well, I guess what are some of the metrics that you use to keep track of, like all these different strategies, your 40 to 60 strategies? How are you looking at them and how can you tell if they're underperforming?
I mean, out of bounds, pretty much. It's like that's the only shitty thing. I mean, it's much harder with anything that you're forward testing in small sample size, but it's like what's the largest drawdown? Like, what's the largest drawdown it's ever had? how are other strategies that are somewhat correlated to it performing also? It's like if this is the laggard, with when other correlated strategies are basically not lagging for some reason, what's wrong with this one? Like, why is this one a lame duck all of a sudden? But all you can really do is look back on the data and say, hey, listen, is it out of bounds? Why is it out of bounds? Turn it off. And does it come back into bounds? And then basically decide to allocate back to it accordingly.
And when okay, well, let's not jump ahead too far. When you talk about out of bounds, can you explain that to the people?
So it's like, for like using the win rate example from the past, it's like, okay, you've got a strategy that has 1,000 trades over the past 10 years. The largest drawdown it's ever had has been 10%. And the largest amount of losses in a row has been 10 also, for the sake of argument. But all of a sudden we're at 13% drawdown, and you're on the you're on the 12th loss in a row. It's like, okay, something's wrong there. Turn it off. What the hell's going on?
Okay. And then when you turn on your strategy, turn it back on, because you talk about turning it off and on. Do you forward test it, or do you just turn it on?
I just turn it back on.
Okay. Just, I was curious about that. From
did it come back into bounds? Is there a reason that it came into bounds? What was there an error? Was there some sort of structural dynamic that changed it?
Okay, so you're like, even when you sideline your strategies, you're still tracking how it's performing.
Yeah. No, it's like,
so this technically is always being forward tested then.
Yeah, correct. It's like, if the best part about building a strategy is the fact that you have it forever, right? Like, I can look back at some of my absolute trash strategies from 7 years ago and see how they're performing. Some of them all of a sudden just like do like a bear market rally and just rip face. It's like, you never know what might start working out of the blue. I'm not saying I'm going to go back and trade that, but it's nice. It's like, I think it's mandatory as a trader, especially a systematic trader in some regard, to be able to look back and say like, hey, what's going on with all the things I built in the past?
That's very cool. I think that's very cool personally. As someone who doesn't have that many strategies, there's not a lot to track, and most of these are not live. So we don't really have like a forward testing to, really go off of. But I think that's very cool personally.
There's always a way to do it. It's like, it's I don't want to call it fun, because it's like a little bit brutish, but now that you have AI, it's like, just talk, pick a model and talk with it, and just be like, okay, it's like, listen, this is my strategy. Here's the rough outlines. How would I turn this into a way that I can automatically track this data and turn it into a time series that I can, keep tabs on. It's the odds are that you can find a way to, turn it into some sort of data that you can keep tabs on.
Yeah. I mean, we can forward test it. We just have to actually like run the back test again on like what on pretty much our code. And we don't have to modify the code that much, because obviously we save the codes for each strategy. But
of course.
You get what I'm saying. It's just not live, so you can't just go, oh, let me just check and see how this strategy is doing today. You can't. Yeah. So I think that's cool that you can have that. And what metric has been the most surprising to you that you find useful? Some people use like win rate, and I guess maybe like profit factor. Some people use RR. I use RR personally. But what metrics have you found to be like, wow, this is useful?
I don't know. I'm fairly basic in that regard. It's like, win rate and win rate and RR, right? And and basically effects of slippage primarily. It's like I'm obsessive about slippage.
Okay, yeah.
And commissions also. It's like a lot of the things. A lot of people will basically create a strategy, and all the metrics take care of itself. It's like, oh yeah, my Sharp or my Sorrentino is good, right? But it's like, okay, it's like, what is your yearly effective commissions and slippage? It's like, I have a lot of strategies that would be perfect if I could trade them for zero.
Yeah, I mean, I heard you mention you just mentioned Sharp. But you also mentioned like Monte Carlo and things like that. So are you using stuff like that, or like how does that work?
Oh yeah, okay. No, all the standard
simulations.
All the standard simulations.
Some probability. Yeah,
exactly. It's like if you have the Monte Carlo bands, it's like, you don't want to like, there's a lot of like little nuance things. It's like, oh yeah, it's like, here's the and an old friend or mentor called it, I think, a spaghetti string monster, right? It's so like the Monte Carlo. It's like, you don't want to see your strategy band sitting at the top of the top of the Monte Carlo, right? It's like generally strategies that tend to perform actually, it's like their band across the Monte Carlo. It's ideally it's a tight distribution, but it's like their band is basically kind of like lagging or to the lower end of the Monte Carlo, which means that all the other simulations did a little bit better. It's like if the laggard continues to work, then the odds of a little bit of outperformance, or at least staying in line, is higher than picking something towards the upper band.
Okay. Uh, I ran a couple Monte Carlo tests, but I don't have like the greatest knowledge of it. I never really noticed anything about it being a tight spread versus a wide spread. I usually seen them very dispersed in general. I have not seen a tight spread one, so that's interesting information to pick up on. So you think that's a good representation if you have to? Okay, that would make sense because that just means the standard deviation between them is a lot less. You know?
Exactly. Yeah. No, when it comes like for a Monte Carlo, it's like I don't want to see a really, really wide distribution and see my strategy somewhere in the middle. Right. Yeah. It's like that's generally a nightmare to me. Like I want to see a pretty tight band there.
That makes sense. Yeah, that makes sense. Right. Yeah. That means your confidence interval is a lot higher anyway. So that means you can trust the data more. Okay. Correct. So cool. So no real advanced metrics that you find overly helpful past the basic information then.
I mean, every strategy breaks. It doesn't matter how good the back test looks. It doesn't matter. It's like I've had a lot of beautiful strategies, right? That it's like, oh, everything looks absolutely perfect. It's like, oh yeah, no, you could write a PhD thesis about it. And it's like, and it works great for a month and then just gets smashed and never works again. I'm like, okay, it's like explain that, right? It's like you know, in my mind, the tallest person in the world should also be the fastest, but it's just not the case, right?
That is not the case.
Right?
At least I don't think so.
I don't
unless
know.
we just find out like there's some hidden people in the world.
I will forward test that. When I have free time, you know.
Okay, cool. All right. Okay. Also, I wanted to. Oh, okay. We can close on this. I wanted to talk about just in general. What is your background? You know, you said you kind of got into programming a little bit. What is your background? Like school?
Completely. I was homeschooled originally. Graduated a year early, and pretty much just worked for myself forever after that. I only had one job ever in marketing, and grew up on a farm, and yeah, pretty much just tried a bunch of different things, started a couple different businesses, and eventually found trading. So the very weird background. Did totally skip the college route because I was starting two different businesses at the time. It's like kind of in the human behavior sort of area, and I had no interest, didn't know what I wanted to do, but just wanted to try a bunch of different things. Was always a risk taker.
Ooh, I like that. I like risk take. I'm also a risk taker.
Hey, so, you have to. Everything you do is making a bet on the future, man. You have to.
Well, I guess in a risk taker, I mean, my risk tolerance is a lot higher than other people's. And I think that comes down to, like, once again, I kind of mentioned it, like, I'll throw money in the blender because I know I can make it back. Like, I'm perfectly, it's just whatever to me. It's like, okay, so what? I'll do it again. Yeah. And that's kind of always my mentality. I can do it again. If I have proven to myself that success is repeatable. Yep. That's what I tell myself. So I have no reason to be scared.
And that's mandatory.
And that's kind of like my logic. So
strong logic. I like that.
I mean, that's the experience that I had. I can't really relate to everyone that's scared about different things because my life just hasn't given me that experience. To be scared is giving me the opposite experience, to take risks, work hard, be disciplined, be consistent, put in your max effort, grind it out, and, you know, don't be emotional, stick to your rules and get back up on your feet. Keep fighting. So that's kind of been my story. And yeah, so, but once again, you guys, this is Quant Room, the stories behind the data. I feel like we got a lot of stories today about a lot of data. Very interesting. Very unique guest here. He's doing something different from probably most of us. Not too unique that we can't relate, but definitely on topic and just a different approach. I literally love the mindset that you have. Definitely about dropping the ego and letting things that is obviously going to be smarter than you over time take over. So with that being said, my last question for you is, what characteristics do you think has really improved your journey and helped you out in trading the most? Like, just give me one.
Being a generalist is number one.
It's like, ooh, what does that even mean?
It's adaptable to do all things, right?
Oh yeah. So kind of like a chameleon. Like you're like a chameleon. You can adapt. So just the adaptability is what you believe, you know, not really being hyper focused, but I can hyper focus on multiple things at different times. Correct. And kind of pick them up. So, okay, that's what you mean.
Yep.
Okay. And then what is one thing or what characteristic do you think has been the most detrimental to you in your trading journey?
Most detrimental. Having a very, very high pain tolerance, I think, was the most detrimental. Because I think that I think if I had a little bit of a less of a pain tolerance, it would allow me to it would have forced me to basically, I don't want to say strategy hop faster, but to explore new avenues faster. I wish that I branched out to more markets faster, as opposed to having a pain tolerance to endure things that weren't ideal for longer in certain markets.
I like that. I like that. I have this thing, even like in life, like with a girlfriend or whatever, it won't matter. I I can't quit. I hate quitting.
Yeah.
I always think the same confidence and delusion that I have in my head that keeps me going is the same thing that stops me from quitting.
Yeah.
I won't quit under the worst conditions. And it hurts.
It's a double-edged sword, man. It's a double-edged sword.
I have wasted so much time just not quitting because I just don't know how. It's such a thing I struggle with probably the most of my life, is just quitting things in general.
Hey, listen, as we said before, it's trading like nothing else will hold that mirror up to you and be like, oh, God, what are my damn flaws? That's actually an amazing question. I don't hear people ask that often, right? So often people are like, oh, what's the like, to your point, like, oh, what's a personality type that's been beneficial to you? But people don't often, especially in interviews, really highlight what's something that's slowed your progress. I think that's an important one. I think as traders, that's something you should shine a light on, right? It's like, understand that part about yourself. And if you can, find that, like, find a way to shine a light on that on your counterparty, then that's edge also, right?
Yeah. The goal is to try to give people like who's just getting into this or maybe in it and struggling, just to give them like a real perspective of what can help you. I mean, that's the whole point, because there's not enough conversations being had about this. Like the last person, we had Chris Shanks on here, and what he said was really good. He said his thing for the disadvantage was the inability to follow your rules.
Yeah.
That one spoke out to me, because I think that has probably been one of the biggest struggles in kind of my trading journey as a systematic trader, at least. Discretionary, not so much. I think, discretionary side, you have some wiggle room, but when you can't follow your back test and you're always fiddling with it, I think sometimes that can be a big pain point.
Yeah. Yeah, for a lot of people, it's easy to say whatever with $50, right? It's the second that you stack a zero and then another zero and then another zero, behavior changes. But that being said, behavior that you have with $50 will bleed over to behavior that you have with 5,000, and so on down the line.
Yeah. So, okay. But that's going to close out this episode, guys. It's Quant Room, powered by Spikeet. Once again, today, I feel like we had a very special guest. I guess I was kind of interested in how this one was going to go. There wasn't a lot of information on you exactly when we were picking things up. I knew what type of trading you did. I knew you were taking loans. I knew you was taking shorts. But the information I got on you today, man, I feel like it's really good. Okay. I feel like you, once again, I feel like you have this very unique approach. I think it's very, like you said, it's adaptable. And I think a lot of people could do it and learn from it. So I'm glad, I actually got to sit down, have this conversation with you, because I think there's going to be more traders in the future, especially with the AI coming out, and you seem to be on an early wave of it, especially with your approach of how you structured the AI to kind of overcheck and set balances for each other. I think you're really getting to it, man. So congrats on your success, and great luck in the future.
Appreciate it, man. Listen, happy to be here, happy to chat, and listen, hopefully people take some nuggets of what I'm talking about, find a better way to do it, then send me a DM and go, hey, listen, you really suck at what you're up to. You should be doing it like this. I'll be happy to chat. I mean, listen, we have room. It's I have desks. Let's make it happen. It's make me look like an idiot, please.
Yeah. So guys, you don't know, that's an offer right there. Prove him wrong. Prove you can do better. You can join him. Yeah. Join the team, man.
Quite happily. So, we have alternative data that you can't get your hands on. Come work with us. It's No, I'm interested. Always looking for other people doing smart things or doing dumb things and finding a way to turn it around.
Okay. And for you guys out there that's made it this far, thank you once again. I really appreciate it. Definitely drop some comments, subscribe, of course, and all that. But more importantly, drop some comments about who we should interview next, who you guys think would be, great to have on the show. The show will not go on if we cannot find people that obviously are bringing great stories like Max here. So we obviously need that. And as you know, in our community, we're silent, we're tight-lipped, we don't like to show face. It can be hard to find people that is, willing to go out and give us some type of data to help the next person out. So please, 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 please comment on who you would like to see next. Doesn't matter if they don't need to be profitable. They just need to know something about what the experience is and their journey. We're trying to get the stories behind the data. You don't have to be the most successful in the world. You don't have to get 1,000% returns. You don't have to be a millionaire. That's not the goal here. We're trying to get the stories behind the data. So if you know someone like that that's willing to share their journey, their path, especially the walk on technology and how they develop stuff and how AI has helped them, or just whatever they had to do to get the back testing done, the journey is what we're trying to capture here in the series. So bring them on. Let's put some comments down. Let's try to help the next person out. And that's going to be it for this episode. Peace.
Sweet.